And thank you all for registering and for attending today, our 2024 first webinar of the season, What Nonprofit Financials Really Tell You. Um, we have, oh, hey, Patrick, next slide.
Hey, what?
um, this workshop is brought to you by, we had a long conversation about who is going to be in control. By TD Charitable Foundation, and I do expect Rob West from TD Bank to join us later on, so we can have a chance to thank him in person for this. I think what we've got next, Patrick, is just sort of the logistics.
Yep.
So if you're comfortable, please turn your camera on. If not, that's okay. Please mute yourself unless you're speaking, and there will be opportunities to do that, but it eliminates the feedback if you're on mute. Enter comments and questions in the chat box, and I'm going to be monitoring that throughout, and hopefully feeding questions to Patrick. Also, please be respectful of everybody on the call. We are recording this. The PowerPoint itself, the recording will be made only to session participants, and really to those who complete a session evaluation, which we're going to do as part of the PowerPoint. So don't get off before you do that. And agree by participating in this conversation, you agree to provide follow-up information to us to help us measure outcomes. So that means I may give you a call and say, hey, you were on the call. I don't know. The evaluations are anonymous, so I don't know who did what. But if there's anything that you particularly liked or had questions about, share that with me. So if everybody is okay with that, I'm going to turn it over to Patrick.
Great. Well, thank you, Terry. Always happy to be with y'all. So today we're going to be talking about, what financial statements really tell you, nonprofit financial statements in particular. And so the objectives for today is, one, help to increase literacy around nonprofit financial statements, enhance your analytical skills. So how do you actually look at financial statements? What can you see in there? Think through what they're telling you. And then improve the presentation skills that you might have regarding your financials. Not everybody is able to read regular small business financial statements. Nonprofit financial statements are a horse of a different color. And so understanding them and being able to present them in a way that is going to be useful for your board, for your staff, for other stakeholders is going to be really important. And then we're just how these financial statements can help you in your strategic decision making. So let's actually start with a quick poll, Terry, if we are able to do that. And you're muted, so I can't hear you telling me that you can't do that.
And so
there
I have
launched
the poll. I have launched the poll. It's a quickie. So if everybody would just take a minute here. How well do you really understand nonprofit financials? Not at all, a little bit, enough, pretty well, very well. You're a banker in disguise. I think I've got a couple more people.
Well, I'm not responding, so I don't want to throw the
me neither. Okay, there's 5. Okay, a 5. All right, I think we'll stop there.
What did we learn?
Well, 5 of 7 people participated, and everybody thinks that they know enough.
So I'm done. I've just given everybody an hour of their day back.
Yeah, thanks for coming.
Yeah, we're good. No, hopefully you'll learn something today, and we'll give you some greater insight and maybe some different tools that you can use as you're looking at your financial statements. But I see that Rob West is here, so why don't we back up just a little bit and let Rob West. Thank you, Rob, for y'all's support of the organization, and I'll let you take it from here.
Good afternoon, everybody. Sorry for being tardy as we jump from meeting to meeting. But my name is Rob West. I work for TD Bank. I work in the Department of Community Development, and my job is to make sure the bank is helping all communities, especially low to moderate income communities, find access to banking and access to capital. And I work along with a lot of nonprofits like Terry's to help those find their way. So I think I'm the one who put enough on the poll. So I guess I can leave. But everyone, thank you for being here. Thank you for being here.
Great. Well, thank you, Rob.
You notice I didn't put I know it all. I just enough.
I don't know if that's scary that our bankers are saying that they only know enough. So since we're talking about nonprofit financial statements, I want to come back to actually this slide and just say that everything that you're doing, whether it's presenting your financial statements, whether it's the programs that you do, who's coming onto your board, who you're hiring, and things like that, it should all come back to the mission, vision, and values of your organization. So if there is a question about how you're presenting your financials, or why you're presenting your financials to different groups, go back to your MVV and just go, does this actually align with who we are at our core? And if you don't have strong mission statement, vision statement, value statements, I'd highly encourage you to go do some strategic planning, work with your board, encourage them that this is something that is going to be critical, not just for, printing it out and putting it on the wall. It's going to be important in your fundraising activities. It's going to be important, like I said, in terms of who you bring onto the board, who you're hiring, who you're working with, what programs that you're offering. But believe it or not, your MVV, your mission, vision, and values, tie directly into your financial statements, how you present them, and how you're choosing to inform people about how you're doing financially. So this is how financial statements look for many of your board members, probably most of your board members. They can't figure them out. They can't read them. They don't understand them. And even those who are business leaders, again, nonprofit financial statements are different than business financial statements. There's a lot of similarities, but there's some differences. And so helping them understand this is critically important, particularly when the story that's being told in all of that is our cash reserves are declining quickly. So the purpose behind your financial statements is actually to help there to be understanding, to help for there to be that decision making. And it's not just putting the numbers out there and saying, here's the numbers. It's presenting them in such a way so that you can actually understand what's going on with the organization and how to move forward. So one of the best storytellers of all time, Ernest Hemingway, said, when asked, how did you go bankrupt? Well, he said, how did you go bankrupt? Very slowly, and then all of a sudden. You want your financial statements to actually tell that story much earlier in the process, so that you understand that you're going bankrupt before you actually get to that very quickly point where you don't where it's like, oh, it just happened. It didn't just happen. The numbers were there all along. It just may not have been presented in a way where everyone understood it and was able to raise the red flags around it. There's also needs to be a good understanding of whose job it is with regard to the various aspects of the financials in a nonprofit, but also in terms of who's in charge of what. So I'll just cover this really quickly. So the board and the CEO, it's a leadership partnership, and each is responsible for different sorts of things within the organization. So the board, they're operating at that higher level, at that 30,000 foot level for the organization. So they're operating in concepts and strategies. They're dealing in assets, investments. They've got that long-term focus. They are supposed to be responsible for that mission, for the strategic plan for the organization. Yes, they want to have the staff involved. Yes, they might turn to the CEO and go, hey, we need your help in terms of making this happen. But ultimately, they're the ones that are responsible for actually making that long-term focus, that long-term plan actually happen. And then their purpose is to safeguard and grow the assets of the organization. They're supposed to be helping the organization flourish in some way. Whereas the CEO, the management, they're in the world of details. So you'll often hear about the stories of the board micromanaging the CEO or something like that, helping inform the board that you're not supposed to be like in the details. You're actually at that higher level. You're dealing in the activities. You're actually spending the revenue and making sure that there's those controls in place for the spending that's going on. You've got a shorter term focus than that. The longer term focus, and then you're supposed to be producing and controlling. The CEO and the management is supposed to be producing and controlling. Is there overlap there between the two? Absolutely. Like I said, it's a partnership between the two, and there's going to be that Venn diagram of who's responsible for what, and there's going to be stuff in the middle. But having that very good relationship to be able to talk this through in terms of, hey, this is my area of responsibility. Yes, I need some help, but ultimately, I'm the one that's supposed to be doing it. And similarly, with regard to encouraging the board to be focusing on what they're supposed to be focusing on, will help make sure that the organization remains healthy in the long term. And if, as part of your board orientation, as you're bringing on new board members, having this conversation, helping to educate them about it, it does not matter how many boards they sat on before. One, they seem to forget whenever they get onto a new board, and I'm not and having sat on any number of boards, I do the same thing. So actually having that as part of orientation, we're actually talking through what is the board responsible for, what is management responsible for, and having that conversation. But then also having orientation around nonprofit financial statements and things like that to bring them up to speed will be really important. The financial responsibilities of the board is to ensure adequate financial resources. So that's that fundraising and development piece that is going to be talked about, in some of the other sessions. And then protecting the assets and providing the financial oversight. So it's these last two things that I'm going to be talking a little bit about today. So I'm going to be going relatively quickly over the different financial statements that an organization will have. And I'm going over it quickly because we covered this last year as part of this series, and I went much more in depth in terms of what they are. But I'm also happy to answer any questions. So I'm going to talk about some of the tweaks and everything as we go through it. But your financial statements are the formal records of the organization's financial activity for a particular point in time. So that's important to know that it's a snapshot of where you are at that point in time, and they tell the story about the financial health of the organization as well. So the statement of financial position. This is also known as the balance sheet. And so in the for-profit world, it would be referred to as the balance sheet. In the nonprofit world, it's called the statement of financial position. So if you really want to like aggravate any number of your board members, keep referring to it as the statement of financial position, because none of them know what that is. And then you just go, it's the balance sheet. So this helps you to evaluate what the organization owns, the assets, against the liabilities, what is owed, in order to be able to find the net assets of the organization. So the net assets are equal to the assets minus the liabilities. It may include the restricted funds that you have. So if somebody gave you money that was for, and they were the ones that said it needs to be restricted for this particular program or activity, those should be showing up on your statement of financial position. And you should be receiving, whether you're doing it internally or you have an outside financial resource that's helping you, you should be receiving this on a monthly basis. The statement of financial position is also more accurate if you are working on an accrual basis as opposed to on a cash basis. And I know some small organizations will operate on a cash basis, but if you can shift over to accrual, and I'm not going to talk about the difference between accrual versus a cash accounting, I can do that another time. But there are benefits to it. So as you look at this imaginary statement of financial position, actually this is from an organization, I just simplified it a little bit. So the top section is the assets. That is what you own. So you've got cash and cash equivalents. You've got the contributions receivable. So and then you've got the prepaid expenses and the property and equipment. So the total assets, that's what you own. The liabilities are what you owe. So payables, those are the bills that are sitting on your desk. The debt, that's what you owe the bank or your credit cards or things like that, and then other liabilities, and that comes up with your total liabilities. And then the net assets, you can see listed out, with donor restrictions and then without donor restrictions to get your total liabilities and net assets at the bottom. So the total liabilities and net assets, I mean, that's essentially if we took everything that we own and we decided to sell it all and we paid everybody that we're supposed to be, paying out, that's what your net assets are at the bottom there. So the statement of activities is also known as the P&L. So that's the equivalent on the for-profit side. It's the revenues and expenditures, and it's by program. And I should update this because I'm encouraging people to not mix up their statement of activities with their budget statements anymore, because, well, I'll talk through why that is. If you're really good at your financials and you're able to keep them solid, that's fine. But essentially your P&L, and where people are getting into trouble, is this is money coming in and money going out. And where I see organizations getting into trouble with their statement of activities is that they will include funds that are released from restrictions. So those donor funds that were restricted in some way that have now you've satisfied the restrictions on it, they're having those show up on their P&L, and they should not be showing up on their P&L. It's muddling their P&L in some way. You already received that revenue. You already received that income. So that should have been reflected at another point in time. Whereas on your budget statement, you can say that you expect that you're going to have these funds released from restrictions, that we anticipate that there's going to be this much that's going to be released from restrictions, and whether or not they ended up actually getting released from restrictions. But like I said, I'll talk about that a little bit further. So there's a saying out there that revenue is the measure of how hard we worked, and then the profit is whether it was worth it. So in the nonprofit case, it's going to be the revenue piece still, but it's going to be the change in net assets will tell us whether or not it was worth it. So this is your statement of activities. So you've got the unrestricted, the temporarily restricted, and then the total. And so the funds that are in the restrictions, those are things that came in at that point in time where the donors actually said, I want it restricted to this particular program or activity or something like that. It is not when the board says, hey, we want to like set aside funds or those sorts of things. So that's what the temporarily restricted is. So you can see on the statement of activities for this point in time, the individual donations, the grants, the investment income, any other income, and then you've got the total revenue. And then you have the expenses broken out into only 3 areas. And again, I would try and simplify, particularly when presenting to the board, not necessarily for the finance committee or something like that, but when presenting to the board, try and simplify your statement of activities as much as possible so that it's easy to understand. So putting your expenses into the 3 categories of program services. So whatever things that you're doing to deliver your mission related items, G&A, your general and administrative, and then the fundraising expenses, because those are the 3 categories that for your 990, you need to break things out to anyway. And this then allows for some very simple ratios and things like that for people to be able to do and for you to be able to talk about. So then you have the total expenses and then you have the change in net assets at the bottom on that. So that's the statement of activities. So here's another one. So this is one of these, how you present your financial statements can tell very different stories. So if you present them in this way, where it's all the money coming in, all the money going out, you've got all of the individual donations, you've got the grants, you've got the investment income, you've got the other income, and you've got your total revenues of $65,000. And then on your expenses, you've got total expenses of $55,000. Your change in net assets is going to be is reflected there on the bottom, and I have a arithmetic error there, but that should that's okay. So we've got $10,000 that was left over at the end. If you actually break it out by the unrestricted versus temporarily restricted, we now suddenly have a very different story, because that 25,000 was actually made up of 15,000 on the individual donations of temporarily restricted funds. You don't have access to those funds until you have actually done satisfy the restrictions that are associated with it. So at the end of the day, when you go down to the bottom, you still have that total of your change in net assets of being $10,000, and everyone's going, yay! But the problem is that on your unrestricted side, you're actually in the hole $5,000, even though you've got another 15,000 sitting in the bank that you can't do anything with until you actually satisfy those restrictions. So by presenting your statement of activity so that it actually includes both unrestricted and temporarily restricted funds as they're coming in, and how you did for the year as well on those things, you get a better picture of what your flexibility is and where you need to be paying attention. So if I was the executive director, I might be going, oh my gosh, we've got to focus on these program activities as much as possible so that we can get those funds released from restrictions, and that'll help clear up that negative balance that we have over there. The other thing that you could do, though, is you can leverage those temporarily restricted dollars to actually go out and get a loan or something like that against those temporarily restricted dollars to actually free up unrestricted dollars to do that. So there's ways of doing it. But again, presenting your statement of activities where it's broken out, you might suddenly realize that there's very different stories that are being told within your organization that way. So budget versus actual. So the board should have a budget versus actual statement at every single meeting, so that they have an understanding of the budget, your best guess as far as what you were going to be doing for the year, and then what has actually happened. It's going to be most useful if it's clear, uncluttered, and following standard accounting procedures. And then management will review more detail with the board. So you might actually have a cover memo that goes along with it, that goes to the board. But the executive director, the management, they're going to have all the detail in terms of all the small stuff and everything else that goes in it. But as I said earlier, I would wrap your budget report up so that it's actually a lot easier for the board. They don't need to know that your paperclip budget was $50 for the year and that you've only spent $25 on your paperclips. It's not material, and they should not be involved in that level of detail. I would wrap up your paperclip budget into your G&A, line item, and do it that way. And let the finance committee also be the ones that are dealing in that kind of detail as well. So here we have, I went one forward. Okay. So this is the revenue side for an organization that we worked with. And I still find their financials confusing. The way that they presented their budget on the and you'll see it on the expense side also. So they have it broken out, by month. So April of 20, you have how they've been doing year to date. So their fiscal year actually started in January. So you can see how they did for the month. You can see how they've did so far in the year. You can see how they did for last year at this point in time. And then you've got the entire budget for 2020 there, or the year-to-date budget. And then you've got the entire budget. And then they have the variance for last year to date compared to this year to date. So what's missing here? So one is there is no comparison. They have left it up to the board members to do the arithmetic for how they're doing compared to the budget to date. So there's not a variance line with regard to that, for this actual year. And I tend to like to work in percentages and even highlight where some of the greatest variances are, so that they know what is most important. Because again, if they're going to worry about the $25, that's ridiculous. That's not where they need to be focusing. So determining whatever that threshold is where the board needs to actually be worried, or that they need to pay attention to, is critically important. The other thing that these financials do that I encourage people to stop doing is to quit putting the cents on their financial statements. Just round up to the dollar, round down to the dollar. Again, simplifying it so that it's easier to read and get through. And then you can see on, how they presented their budget, their various events and fundraising, way too much detail. They've got items on here that, for the entire year, they're only planning on, on making $4,000 off of $1 million budget, give or take, if I round up. Wrap all your events and fundraising up into one line item. If you've got the chair of your gala and your gala just happened, have them do a presentation on how the gala happened to go, and then you're done with it. But having those items on there every single month and sort of cluttering up the financials in some way just makes it more confusing and harder for people to be able to read. You'll also see that they have on here the PPP loan from this point in time. So, I mean, they accurately recorded that as revenue because it was coming in as revenue at that point in time. And then they had the emergency fund. So this was where I had challenges with regard to how they were presenting their financials. If you have an emergency fund or something like that, I would not reflect that up in the income line. If you know you're going to be if you're going to be drawing down on your reserves in some way, don't put it in the income line. Put it below, put it at the bottom or something like that, so that that is accurately reflecting how you actually sort of, plugged how you're doing. Because if you take out that emergency fund, you can see that the income numbers, drop rather dramatically there. And you can see the expenses are even more confusing. You've got, just in terms of like the total number of line items that are there and the small dollar figures in some way. So again, they could wrap those things up, but also changing the way that they are presenting their expenses, so that instead of it just being by their chart of accounts, doing it by, their program services and whatever your major program services happen to be, G&A, and then fundraising expenses. That's going to help the board understand really where the organization is going, what they're spending their revenue on, what they're spending their income on, and whether or not they're actually meeting their obligations with regard to delivering those programs. There is no way, by looking at this financial statement, the way that it's presented right now, to really understand how well they're doing in terms of providing their programs and services to the community. It's all, in these individual categories. So again, lumping things together, and I know that you'll have board members that are like, well, I want to see personnel broken out as I want to see all the personnel broken out as a separate line item. That's really for the finance committee to get involved in. The various personnel line items really ought to be broken. You ought to have people that are assigned to the various program activities and things like that. So again, you can have a better understanding and more accurately reflect how your programs are doing. And then at the bottom, you've got the surplus and deficit. That's where I would put any of those things that are not really revenue. So if you're taking a draw from your endowment, if you're taking a draw off of reserves or something like that, putting those things below that surplus or deficit down at the bottom, one, you can have a good understanding, you'll have a better understanding of how the organization is actually doing, and then more accurate, you're reflecting in a way, and we needed these other money sources to be able to do what we're doing. So let's take a 2-minute break. Is that right, Terry? Look at that, you're on mute, so nobody can hear you.
No, 2 minutes. I'm going to go warm up another cup of tea. I'll be right back.
Okay.
If you've got questions, throw them in the chat box, or maybe we can
Throw
take
them
a
in the
minute.
chat box.
Hey, everybody. Okay, I've got us on going on the 3rd minute, so
And I don't know why my video is not coming back on.
that's very strange.
It's all good. I broke it.
Oh no, Patrick.
I'll live. Sorry about that.
But
I
we
know
can still
everyone.
hear you fine.
That's good.
We're hearing you well. So
Good, good.
any questions so far for Patrick before we move on to the next section? Okay.
Sam's shaking his head no. All right. So we're going to be talking about other ways of presenting your financials. Again, besides just the rote numbers, to make it not as scary for folks like you see on the left-hand side, and actually more welcoming and inviting as you see on the right-hand side, because that's ultimately what we want to do with our financial statements. So everyone's familiar with bar charts, and we as human beings seem to really love playing around in Excel and figuring out the latest and greatest way of presenting things by using the 3D graphics and things like that. But I think that you can see, like, between these two, the one on the right is much more straightforward, easy to read. It actually shows a much more dramatic difference in terms of the total numbers of cookies eaten from 2021 to 2022. So don't get drawn into trying to use the latest and greatest tools that are out there. Sometimes the most simple and straightforward ways of presenting information is going to be the most clear and help people understand what's actually going on in those situations. And you can also see with the 3D one, it's cluttered in terms of how the text and everything is on there with regard to having the 20, 27 and 38, actually, on the chart itself like that. So I'm usually not a fan of using those 3D effects unless, well, there's all sorts of reasons, but I don't think any that we're talking about today. So these are actually just the two different ways of presenting the same, information. So you can either present it horizontally or you can present it vertically. And it really doesn't matter one way or the other. It's relatively easy to see, and using bar charts. And when you're looking at, in this case, the different sources of revenue for this organization, you can see very easily that clinic fees, are the primary source. The foundation's grant is next, the contributions is next, and then board gifts is the final one. If you have a lot of sources of revenue and you're doing some sort of bar chart, there is nothing wrong with, at some point, if the numbers are getting small or something like that in terms of the amount of money or those sorts of things, lumping a whole bunch of things together into like other revenue or something like that. And then you can have the conversation around what actually makes up that other revenue piece. But again, the idea is to help people as they're looking at this have a good understanding, at least in this case, as far as like where the revenue is coming from. So if that's where you're getting, if the clinic fees is the main way that you're getting in your revenue, gosh darn it, you want to make sure that you're doing everything possible to make sure that those clinic fees continue to be coming in. Line charts. So this is a running revenue total. So they've graphed out last year's revenue, and then they're laying on top of it this year's revenue to date. So this is a good way of actually being able to compare, you know, 1 year to the next, and it's the running revenue. It's not what happened in each month, but it's the cumulative effect of going from January through December and adding on the revenue every single month, so that you can see, hey, how are we doing compared to last year? So this is, I love this sort of chart, particularly with, I love doing running revenue and graphing it in some way so they can see that upward trend with regard to the revenue. So another way of presenting these bar charts, though, is you can do stacked bar charts so that you can actually compare this year to last year. And so very easily, in this case, you can see, oh, we're doing better than last year with regard to the clinic fees. We're doing much better with regard to foundation grants, or excuse me, this year is actually in orange. So sorry about that. We're doing worse on clinic fees. We're doing worse on foundation grants. We're doing worse on contributions. But gosh darn it, our board is knocking it out of the park this year compared to last year. So you'll often see where, you know, you'll have these bar charts where the numbers are side by side, which is another perfectly fine way of doing it. But doing it in a stacked way, you're able to just see it in another way in terms of how it's presented. Again, in terms of the decision making, in terms of the conversation about how we're doing, yes, you could just present this as numbers, but presenting this in a visual kind of way helps those of us who are visual learners as well better understand how the organization is doing. And then we've got these stacked bar charts. So this the one on the left is showing it just by dollars, so you can see the different percentages, you know, in terms of what each of the makeup was this year versus last year, and what the total dollar amount was with regard to it. Whereas the one on the right, excuse me, it's just the percentage. So it's the amount, it's the percent per 100%. The topmost part of each of those bars is 100%. So you can really quickly take a look at and see how you're doing compared to last year based on that percentage, as opposed to just the rote numbers. And this is good for being able to compare, you know, how we're doing 1 year to the next in terms of that percentage piece. I love presenting information like this to boards so that they can get a better understanding of really how the organization is doing. So like on foundation grants, you know, you can see this year it's a much smaller percentage than it was last year. And so you can start to have the conversation about why that is. It might be that certain foundations have backed off this year or something like that. But also with regard to like store sales or something like that that you might be having, you know, helping them understand what that percentage makeup of your revenue is going to be critically important. Pie charts. People love them or hate them, and this is a great example of, on the left-hand side, of why not to use pie charts. It is hard to tell how much each of those numbers are and whether or not there is a great variance with regard to the percentage of the pie, particularly with regard to them, that, and this. You can kind of see that those, you know, is the smallest, but on the other ones it's kind of hard to tell. Whereas if you present it as a bar chart, it's very clear. You're able to read it very quickly and see where that happens to be. A great way of using pie charts is when, you know, on the right hand side, it's really, it's actually, you've wrapped up a number of things so that you can see the dramatic difference between this and that. So using pie charts, the idea, again, you want to be using these charts as much as possible and choosing charts that are going to help tell the story of your financials, tell the story of the organization, and not used to actually hide where there might be challenges and troubles and everything else, which is what the pie chart on the left might be doing. It's like, we'll confuse them by presenting it in this kind of way. As management, that is not your role. Your role is to help the board understand so that they can make their decisions properly. So I want to give an example of a nonprofit that we worked with, and just in terms of how to present the financial information that caused them to make certain decisions and choices and everything else. So in this chart, and I know the words are small and everything else is small on it, but the important thing is that the blue line is the total income, the orange line is the net income. So the orange line is when you took all the blue line and you subtracted out everything that they spent, you ended up with the orange line. And this is how they were presenting their financials to their board on a regular basis. And you can see that they were in some kind of financial trouble anyway. They were spending a little bit too much time below that zero line. But the way that the board talked about it and everything else, it's like, hey, we're doing okay. We're making a comeback. You can see toward the end there that we were making a turnaround. As we were looking at their financial statements, one of the things that we realized, and we had pointed this out, was that they were putting on their income statement, they were including temporarily restricted funds that they were releasing from restriction, which again isn't income. That is money that they had already received, so that shouldn't be reported on their income statement. And then they were also, what was reflected here were these temporary funds. So this was during COVID when they had the PPP dollars coming in, and then they also had a donor who had actually pledged over a 5-year basis for them to get more financially stable. So they were actually they were including in here also that draw on a regular basis, from those funds that had essentially been promised to them with regard to it. So once we backed out the PPP loan and those donor funds with the promise to give from that donor, we suddenly had a much worse picture of how they were doing. And so we were able to challenge the board with regard to, if you keep thinking that 5-year pledge is going to continue forever, you've already told us that it's not, that the donor has said that time was going to be coming to an end. And, oh, by the way, those PPP dollars are going to be, drying up also at some point.
My name is Akiva. Would you like to tie our egg rolls?
No.
Okay, whenever you're ready, go ahead with your order, please.
So, so this allowed us, by actually presenting the financials in another way, and actually, we literally just did this with them. We would go back and forth to kind of animate the financials so that they understood it's not as rosy a picture as you think it is, and let's figure out how we're going to be getting more money coming in, because they were talking about all of these other capital improvements and things like that. And it's like, if you're not doing things that are contributing to the bottom line here, you're making some wrong choices. And thankfully, they're actually doing really well today as a result of facing those harsh realities with regard to it, and actually presenting the information in a way that the board could understand and actually see, really how they were doing. The final piece that I want to show you is just, it's a tool that you might think about using. So creating a dashboard that you send to the board on a regular basis, on a monthly basis, regardless of whether you're meeting. Even if you're meeting quarterly, sending this to the board so that they have these various pieces that they can see how the organization is doing, with these snapshots. And again, the information is created in a graphical nature so that it's easy to see. And then it's backed up with some of the numbers and everything else. And I know that this might be a little bit small to actually see. So, you know, we've got the budget status in the upper left-hand corner. So we've got the actual year to date and then the actual year to date. We've got the component analysis. So this is their revenue piece. So whatever is important in terms of reporting out from your mission, vision, and values, whatever the board has decided from, you know, KPIs that they want to measure and things like that, you can create these dashboards really easily to present the information in a graphical nature so that they can see it, they can get the information that they need, and they can feel more confident in terms of where the organization is. These dashboards can also include things like the number of people served or whatever it is that the board wants to be, however the board wants to be measuring success, or how you decide that you want to be reporting your success. Creating some sort of a dashboard so that it's out there will be tremendously helpful. So in closing, as you're looking at your financial statements and as you're figuring out how to present them in a new way, ask yourself, you know, what's that story? What am I seeing in these financials? But then who's the audience? Who is actually going to be reading this? And so, yes, you're going to have the financials that you want to be presenting to the board on a regular basis. And we talked about that in different ways of doing that. But also in terms of if you're doing an annual report, how you want to be presenting that as you're presenting information to donors or any of those sorts of things. Think about what's that story and what is the best way of telling that to the audience. Choose the numbers, the formats, and the graphics to actually tell that story explicitly. So don't use numbers, formats, and graphics to actually try and hide the story in some way. Use it so that you are telling the story boldly so that people don't have to guess as far as what is out there. Go back, review the common chart types and what they're actually, you know, the different ways that they're actually used. And then consider for any financial presentation, what story is it supposed to tell? And then how can it be improved? Just because you think that you knocked it out of the park 1 month in terms of how it was prepared, go back, talk to people. It's like, did this actually help? Do you understand it better? And go back and ask those questions. So with that, I'll open it up for any questions that we might have in the last 5 minutes. But here's my contact information. I think that QR code goes to my website. But connect with me on LinkedIn. Happy to talk to you. So
Anita's got a question.
Great.
Hi. Patrick, a very good, clear explanation. Just very good and easy to follow. Just a question for that organization that you profiled that was using all of the graphs of squiggly lines and then they cleaned up their presentation. Give me just a clue in terms of how they would approach a potential donor when their financial picture is not looking too good. Once they cleaned out the PPP and the 5-year commitment, you know, what was compelling to a donor to assist them? And you said now they're doing much better. I'm just curious.
So one of the things that we did with them and what was important, you know, with any planning is facing those harsh realities. And so that was particularly helpful for them in terms of going to donors, we helped them in terms of creating some graphs and charts and things like that basically said, okay, we understand where we are now. The other piece, though, that we were working with them on was we were doing strategic planning with them, and we built out a 5-year pro forma for them, which basically said if they follow this strategic plan, this is what the financial results will be as a result of them implementing it. And so we had that 5-year financials in there also so that they could go to donors and go, look, we need you to make this investment to help us, you know, with this part of our strategic plan, with this part of our strategic plan, so that we can actually become more financially sustainable. So, I mean, and what we were doing was actually creating revenue streams for them. So it was a cultural organization. They were free and open to the public. And I love the story that they were telling about how they were free and open to the public. But the reality is that nobody was supporting them as a result of that. So once we encouraged them to put the admissions fee in place. Once they had the admissions fee in place, their membership numbers increased, their donations were able to increase because they had those names. We had that all built out in the pro forma for them so that they could actually go to someone and go, hey, look, we need the investment to actually have these kiosks out in the space. And once they helped show that that investment was going to help the organization become more self-sustainable, that's when the money came in.
Follow-up question, if I may. With
Yeah.
you all providing assistance to them during this transition time, did the organization go through any measurable or major shifts in terms of management or board leadership?
That's a great question. The interesting thing is that they were in a search for an executive director. And so we had the conversation with them about whether they wanted to be doing strategic planning before they brought on their new executive director, and the board came back and they said, look, we know that we've got issues. We need to get our house in order. We need to get this strategic plan in place. As a board, that is our obligation, so that we can then find that leader that is going to be able to take us to that place that we want to get to, rather than having a CEO come in and kind of, do it the reverse kind of way. So that transition was already in place, as far as that's concerned. The board also took a hard look at who they had on the board, why they had them on the board, and they then built out those matrices in terms of what is it that we need on this board. We don't just need people that are here to have their name on letterhead. We need people that are going to be able to come into the boardroom and be advisors on this, and this, and that's going to help us actually get to that endpoint. And again, going to donors and saying, hey, this is now the makeup of our board. Having your mission, vision, and values be really clear, and then also being able to show donors that this is our path forward is critically important.
I hate to cut us off, but we're right at 4 o'clock, and I did have a question from Sam about the slide deck, and not the recording and the slide presentation will be made available to you. But before we do that, I would like to see if there's one more question, and then if not, I have a very short closing survey that I'd like you to do. So, are there any other questions for Patrick? Okay, well, let me launch this little survey for you. Okay, does everybody have this?
Yes.
All
Thank you
right,
both,
take it.
Terry and Patrick. Thank you both.
Oh, you're welcome. It's a pleasure doing these. I love getting the good participation. So give us a minute and please answer these questions.
And I won't respond again, Terry.
Well, I'm not doing the polls. I have to make them, we spend all this time making them up. Hi, Sam. So one final chance, anybody with a question for Patrick? A thank you for Rob West and TD for making these workshops possible for us all.
There you go. Yep. Thanks for
All
being
right.
on.
Thank you, everybody.
Thank you
Thanks,
for the invitation.
everybody.